Why it's so important is this crypto opportunity is literally the perfect macro opportunity of a lifetime. It's been the best performing asset class of all time. It won't go into infinity doing this, but this is a very high probabilistic outcome that the next 2 years make life-changing money. Firstly, have a plan and write it down. Write it down because you will lose your mind in the middle of the crypto bull market. And your plan might be, okay, I need to average in over the next 3 months or 2 months or 1 month, or just pull the trigger now. I'm indifferent to any one of those. It doesn't really matter. You know, even if it falls 30%, which is normal, it'll be back up. So don't even worry about price, where you get it. Then write down, I will expect, and I'll be grateful every time I have a 35% correction en route. And maybe I can buy some more. I will be grateful for that. Let's go higher.
Today we have Real Vision CEO Raoul giving us his updated prediction for crypto, why the coming cycle will be different, and what we can expect from the coming bull market in 2025. With crypto and technology being the biggest investments this year, Raoul says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months, and why this year, more than ever, we'll see massive capital pouring into the space. With major pension funds and institutional investors on board for the coming cycle, Raoul predicts that crypto is on track to be a $10 trillion digital asset class. Powell says that this cycle will separate itself from its predecessors, as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before.
Is there an exit strategy that you're looking to take chips off the table, because then we're going to have that downturn, we're going to see monetary tightening, interest rates go up and less liquidity in the cycle, or are you not thinking out that far? Is there an exit strategy
through, but I don't know the answers because I'm not sure that we get monetary tightening next time around. We need to see the structure of this cycle. If inflation comes down as far as I think, I'm not sure we'll see monetary tightening. We might see yield curve control. So we might see some tightening, then yield curve control, which is ongoing printing of money. So I don't know the structure of what the next down cycle looks like, but it's probably not as bad as the one we've just gone through. However, if it plays like I expect, because I'm not as young as you, I would take off a decent amount of lifestyle chips and run the rest. Because I didn't do that in the last cycle purposefully, because I wanted to keep accumulating through the full cycle. And that's really paid off for me. And that was a phenomenal strategy because I'm at all-time highs in P&L because I bought in the depths of the bear market, made the right switch to Solana, stuff like that, which is great. But sometimes, you want to take off lifestyle chips. For you might want to just keep compounding.
So we see Bitcoin run first, and we're seeing it play out pretty much in this cycle as well. We see Bitcoin run first, then we see it flow to Ethereum, and then Solana and all the altcoins get a run.
Firstly, have a plan and write it down. Write it down because you will lose your mind in the middle of the crypto bull market. And your plan might be, okay, I need to average in over the next 3 months or 2 months or 1 month, or just pull the trigger now. I'm indifferent to any one of those. It doesn't really matter. Even if it falls 30%, which is normal, it'll be back up. So don't even worry about price, where you get it. Then write down, I will expect, and I'll be grateful every time I have a 35% correction en route. And maybe I can buy some more. I will be grateful for that because then it's out of the way and we can move forwards again. So I actually like them because it's like, my God, it's done. Right, next, let's go higher. So expect that. Don't listen to your friends and FOMO because your friend is making more money because he's bought some toad meme that's gone up 57x and he's now flicking through brochures for cars. It's like, no, don't do that. Stick with your plan, make sure it's about 80% of main assets. No, main assets is not some random currency that you learnt about that you think is going to be the next big thing. That's not a big asset. That's in your 10% bucket. It's like, is it Bitcoin, ETH, Solana, and maybe some of the, maybe XRP, maybe whatever. There's a group of 10 that are really big. It's not in like Bitwise's index. Don't bother doing it. Simple. If not, it goes in your 10% bucket. No FOMO, no leverage. You will be so tempted to go, well, maybe I can just lose some 3x leverage here. 3x isn't much, right? These other degens are using 100x leverage. 3x is fine. 35% pullback, you've lost your capital. People don't realize 35% is normal. Hell, we've had some 50%ers in bull markets before. So that's 2x leverage. You're out.
Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now. We are heading into the banana zone, a period characterized by parabolic moves upwards in crypto prices.
So just don't f that up and stop trying to trade it. I literally don't know many successful, super wealthy investors that made it from trading. Paul Tudor Jones? Sure. But he's probably made more money by owning an asset management business, this hedge fund, than he has from actually trading. Yeah, Stan Druckenmiller. If you think you're Stan Druckenmiller, go get it. But you're not. The easiest way is to be the moron who buys and holds. It's just the easiest strategy in a market that does, on average, like 140% a year in the largest asset. You don't need to do anything else. You don't need leverage. You don't need to FOMO into other stupid stuff. Just do that. And then the other thing is be careful not to lose control of your coins. That's the final thing. So you've got it right, bought the right asset allocation, you're being careful, you're filtering out the FOMO, you're having some fun in your degen portfolio, you haven't got leverage, and then suddenly you realize you've got on some stupid Thai exchange that goes down, and you're like, oh, I've just lost everything. I've done that. MF Global in the old finance world, that old head of Goldman ran MF Global, the largest brokerage, retail futures brokerage. I had all of my money in it. And it went bust in 2 days. It's like, boom, gone. Took 7 years to get my money back. So, people in Mt. Gox still haven't got their money back. So that's the other risk that you've got. So whether you're using a ledger device, whatever it is, you need to have that covered as well. Another one with wallets. Another way to f it up is, oh, look, there's a mint of some new amazing thing. Quick, attach my wallet. My wallet appears to be empty. That's really simple to stop. You have, if you've got a ledger, you have 3 or 4 different wallets within your ledger. One is the one you expose to anything like that. It has no assets in it. You transfer money in. You exchange with the asset out. You then have one where you are selling or buying your assets and you move that into another holding wallet. And that doesn't really hold your important assets in. And then your important stuff, you put in a third one. Just don't blend it all together in some big omnibus soup and then suddenly go, oh, I want to get that free JPEG. And before you know it, somebody's taken all of your long, hard savings at the end of 2025 when you think you're about to buy a house and you're not. You're going to buy a cardboard box and live in the streets.
And then NFTs. Are you going to play the cycle around anything like that as we sort of move through it? Are you going to start allocating to CryptoPunks and Bored Apes or NFTs or anything? Or is that a great way to f up this cycle, trying to get too cute with it?
Look, some people are good NFT traders. I own a whole bunch. Punks, apes, Beeple, Xcopy, all of the stuff you should own. I've got a bunch of that. But I'm not even sure I can sell them, or if I want to sell them. Some people will trade it and will do very well from it. There will be an epic NFT cycle again, but really, it's an easy way to fuck it up too. The best thing is assume that if they're going up, the whole space is going up. So just stick with the program. And again, if you want to do the NFTs, put them in that 10% bucket. I'm sure people can figure out a bit of extra juice there, but if it all goes wrong, it doesn't matter. Because if you do get it wrong and you put it in some random thing that looked like it was the biggest thing ever and that project doesn't work, then and it falls, 50% in ETH terms, you just halved your ETH exposure. It's like, no, that's a way to it up.
Powell's analysis brings attention to the liquidity cycle as a valuable indicator for understanding debasement, signifying a shift in the market's direction. He identifies a crucial turning point in June, where his weekly liquidity index hit its lowest mark. This prompted him to focus on purchasing Ethereum. Powell also acknowledges the divergence between liquidity and asset prices, emphasizing that during bull cycles driven by adoption and speculation, cryptocurrencies tend to outperform liquidity measures. Based on his findings, Raoul Pal strongly advocates for the strategic investment in cryptocurrencies, specifically highlighting Bitcoin and Ether as promising assets. He sees them as assets that surpass the performance of traditional financial institutions' balance sheets and provide a means of protection against currency debasement and the inherent flaws of the current financial system. What is your opinion on Raoul Pal's claim that investing in cryptocurrencies like Bitcoin and Ether serves as a smart hedge against currency debasement? Let us know in the comments below.